Good morning and welcome to Friday, baby. Patriot Radio News Hour. Joe and Jason wrapping up the week. And of course, next week we got the big Fed meeting. Next week's going to be Jobs Week, right? So the first week of every month, the same day we're going to get the rate hike from the Fed. I'm still, I was half a point. They've got me, Jason, at a quarter of a point now. But this morning you said, you know what? It could be half a point.
Yeah, I last year I only said it a few times, Joe, where I thought I saw a future where we would have high or advancing rates and quantitative easing, printing, which that's something those two don't go together normally from our past. And I keep, now I'm seeing other guys saying what I was saying last year, which is I think we might see some quantitative easing. Maybe the rates don't go backwards or they freeze in place, but the quantitative easing, so to speak, with high rates or even advancing rates, and with all the soft news we got over the last week, Joe, the numbers that you cover every day, it sure sounds like they're trying to give themselves permission for a half point on Wednesday. That's what it looks like.
Well, we'll see. Earnings again in full swing. Intel was a disaster. Hasbro, Foot Locker, Goodyear, Colant, McCormick Schilling, Gallo Wine, all announcing layoffs today. But again, we've had obviously a tick up in layoffs, but the jobless data from yesterday isn't showing it. We'll see. I think right now, it's still, hey, you know what? It's slow, but it's not slow enough. It's going to be interesting. I think we're going to get the quarter of a point. I think we're going to get tough talk. How about that? I'm going to go quarter of a point with tough talk versus quarter of a point and, hey, we're almost done. I think the one message that they're trying to convince, they can try to convince anybody all they want about how, no, we're going to be higher for longer. That only works if the data and the economy doesn't get worse. The second the economy gets worse, I think they tuck tail and run.
I agree, Joe. I agree. But if they start just giving free money out, what does that do, right? And then of course that should lead to more inflation. So it can be somewhat complicated when they're trying to maneuver the way they are, Joe. The Fed and the government.
Yep. 800-951-0592. allamericangold.com is the website. We had GDP yesterday. The headline number was good. The numbers behind it, not so much. Today, we had the Federal Reserve's favorite inflation number. Now, here's the funny part. Why is it their favorite? Oh, just so happens to be the lowest one, right? I mean, go figure out, this is the one we like the most. Well, why? Well, because it's always the lowest. So, of course, does it track anything real? No. It's a formula, a bunch of guys and gals, really smart. They probably read a lot of textbooks. They do a lot of reading of data and spreadsheet analysis. And they came up with this thing that they say, hey, by the way, this is our core PCE deflate. They even put deflator right in the title, right? Hey, by the way, we're going to call this, it's really not, but it's our favorite anyway. That came in a little lower in December. So they were happy about that. Again, if there's reason to maybe not go half a point, one of the other things they could point to is, well, the PCE keeps coming down.
Yeah, well, I mean, and how much lower is that number than the PCI, Joe? I didn't get that number. Is it low? How many? Like a percent lower, 2%?
You know what? I was unprepared. Hold on. There we go. So the PCE for December, I had it here. Hold on. Give me a second.
Because that number kind of makes a difference.
4.4.
Oh, wow. That is so nice.
4.4.
Isn't that nice? That is so much lower than the 6.5, right?
Right. Isn't that better? Right? Hey, look at. Hey, by the way, that's not our favorite number. No, but this one, 4.4. By the way, November was 4.7. Then the other data we got on today, consumer spending, and that was soft. And we anticipated that consumer spending down 0.2% in December.
Based off that 4.4, that means they shouldn't do a rate hike on Wednesday. That they should be done. Right? I mean,
right. Well, you would think, okay, 4.4. You've got it right now. The Fed funds between 4.25 and 4.5. So maybe one more just to be above it, right? But to your point, Jason, hey, your favorite number here. It's been falling, and if it falls again in January to say 4%, then all of a sudden, hey, is the Fed funds rate too high?
Correct. And which I think the reason they're going to raise it is because that 4.4 number is ridiculous. They already got the ridiculous number. This is beyond ridiculous. It's obviously inflation's double the number they've got because they switched it in the 80s. So 6.5 is 13 at least. We at least have 13 from the last month's number. So yeah, they know they have to at least get somewhere in the ballpark of the fake reduced number. And then I don't know. I guess they parade that number, Joe, just to make everybody feel better. Maybe it's just a warm and fuzzy number, I guess.
Yeah. And again, just I don't know. It accomplishes that. But again, this is how you do it, right? You get CNBC, you get Fox, right? You get all the stock guys to regurgitate the number. The Wall Street Journal prints it. The USA Today prints it. It's going to be a headline on the evening news, right? So that's how you get credibility on a number they totally made up. $800-951-0592. The Dow is down 65 points. The S&P is down as well. The NASDAQ's up a few points. Gold's gold's come back here. So gold's down $1 right now, $19.29. Silver's off 45 cents. This market recap brought to you by our friends at YRefi. You've been hearing us talk about them for a while. Not involved in Wall Street, doesn't care about Jay Powell, doesn't care about interest rates, doesn't care about politics, doesn't care about earnings season, layoffs, or housing or any of that. Big annual rates of return up to 10.25% annually. Check them out. Invest, yrefi.com. Or call them 888-YREFI-24. And Jason, now you can use your IRA to do it as well. And some of you, depending on your 401k, you may even be able to do it inside of your 401k. What a great opportunity that is. Check them out. By the way, gold's now up. I don't know what's happened, but gold has moved pretty quickly here. We'll check it out if something comes across the screen. But just to wrap up the consumer, they also said, and this was kind of interesting, that personal income fell 0.2%. So Jason, this may be kind of what you were saying. Hey, you may not be laid off, but you're working less.
Yeah, I really think that was the lesson learned in 2020 and 2021, which was first you had everybody just sheltering in place and everything just freezing up. And then everything came roaring back and everyone had free money to spend to try to wake everything up real fast. And then you didn't have enough people you didn't have enough people employed for all this coming back. And so all those people that left us, now we got to get them plus some. And they created this situation where they need to have a flexible workforce. And I think the businesses, they're always going to find their way, Joe. It doesn't matter what the numbers, the employment numbers, all these economic numbers are always trying to forecast and tell. It doesn't really matter what those numbers are if simply the businesses are like, look, we're not going to fire anybody, but we'll just take them down to 5 or 10 hours a week. And then when things get busier, we'll boost them back to 20 hours. And the employee that's working 10 hours a week, they know that if they work another 10 hours somewhere else, or they have 3 jobs at 10 hours each, they're getting their hours somewhere else. So these things can fluctuate, Joe. So I think some of the job losses may be people losing one of their 2 or 3 jobs, right? I think when we get the big job loss numbers, I think when it really hits, Joe, is when these companies have to flush out all the temporary guys, the ones that are just lingering around part-time and they just can't afford any of it. So I think when it happens, Joe, I think when the job losses you're looking for, when it happens, I think we're going to have a couple of weeks or a month straight where you have huge losses. I mean, remember the jobless claims around coronavirus? They reached record highs and they just stayed there for like a year. Remember that?
Right. And now, of course, we're at those record lows. So it'll be interesting to see. But yeah, so wages were growing at a 5% clip, down to 4.4% now in December. Another one of those signs, right, of things slowing. And then this one came out, Bloomberg, the rate of severe delinquencies in autos. That severe delinquency means you're 90 days past. Okay, so essentially you're at that point where the repo man has probably been called, right? He's out there looking for your car. Jason, it hit the highest rate since 2009. Go back, think about like the financial crisis in that housing market crisis. The one thing that, obviously the last time around, people were deciding, hey, I'm going to pay my credit card. I'm going to pay my auto loan. I'm not going to pay the mortgage. This time, at least right now, what we're seeing is I'm not paying my credit cards, and now I'm not paying my auto, but people are still paying that mortgage.
Yeah, I think that's a good point, Joe, because another thing with the coronavirus shutdowns, things were so upside down and backwards that I think a lot of people were thinking, hey, I don't know what my future holds. I don't know what my company's going to do. I don't know where I'm going to get work somewhere else. Friends and family were having difficulties. And so I think a lot of people got very conservative. It's like, hey, let's pay down debt. Let's keep things very conservative because we don't know where anything's headed. And I think it takes time for people, and then they're doing it. There's not a lot of money out there, so they're using the credit cards now, Joe. But look, it's 2023. They were hitting those record high credit cards in 2022. It took them 2 years to start going back to their normal bad behavior. So it's just, like I said, kind of a slow crashing situation we got. It's coming, but it's Joe, it just seems like a little bit of bad news all the time instead of a lot of bad news all at once. It just seems like that's what we're headed for.
Yeah, I agreed. And we're just seeing things slowly tick up, right? We haven't seen the big jumps up. Even,
Yep.
Delinquencies, highest since 2009, yes. But it's not like, oh my gosh, 10% of all auto loans stopped paying or became 90 days delinquent. That number's still in the 2% range. How about this? Numbers trending in the wrong direction. What we're worried about is all of a sudden, do we get that big jump in one of these months?
Yeah, take housing, for example, is what we're talking about. I think the numbers are all showing that we're in a much worse place than what we were leading into the housing crash in 2008, 2009, 2010, and so on. However, in this housing crash or this housing downturn that we're going to have, we're not going to have as much of the outright fraudulent criminality that they had in 2007, 8, 9. I mean, I'm sure there's some of it out there. There's no way that this system is built up as fraudulent as it was in 2008. And the inventories aren't super high, so there's not going to be as much of a crash here. But it's not good, Joe. The housing is not going in the right direction. It's obvious people don't have the money, but we don't have, just like with 2020, coronavirus made things really weird. So there's a reaction. I think the reaction to 2008, Joe, is hey, we got, if you're in the housing market, we got away with it last time. I don't think we can do as much this time. So I don't think housing will be as bad. It's just, Joe, it's going to be progressively, slowly worse, isn't it?
Yeah, and I think that's kind of what we're all in for. We're in this grind, this grinding lower for, I guess, maybe you just steal a thing from the Fed. Maybe it's going to be lower for longer, right? Just that grinding lower versus that, I'm always more like I'm the rip the Band-Aid off type of guy, right? Let's just get it over with, right? But this one maybe has a little different feel to it.
Well, they have that term, Joe. They say soft landing, but I think it's a little dishonest. Softly crashing. Maybe that is what they need to call this. Softly crashing, because I think that's what they think a soft landing is, Joe. It's softly crash. It's a soft bad landing is what it is.
Hey, the plane still crashed and it exploded into a million pieces. It took a while for it to crash.
It didn't go straight down. It skidded off the ground and rolled. Right?
It's like that Talladega Nights Ricky Bobby, the Will Ferrell, that car crash where it went on and on, and then they went to commercial break and came back and it was still going, right? It's one of those.
Joe, I think the one thing the Fed, even though I think they're dishonest and they're crooks, they tend to tell you some things that are going to happen. They tend to not completely be fraudulent and lying. I just think that they use these words that you have to know some sort of other language to understand. And I think that's what their soft landing has always been. They know what was coming after coronavirus, and this soft landing I think they believe they can have a recession, not a depression, and somehow be able to paper over this thing when they need to. If we can get a 5 or 6 points on the interest rates, then we can start printing again. It'll be good. And these guys will just have to pay 4% inflation every year. It'll work. It'll work, Joe. And until we can actually get to digital currency and negative interest rates, they're just not ready for it yet.
Yeah, well, I just got handed a note. We're going to have a huge gold special coming up in the next break. It's limited, but it's a decent amount, but limited. But this price is going to be very, very hot. So that's coming up here in a few minutes. Gold continuing into higher territory now, 1932. And I'm not really seeing any big market announcement. The Dow was down 60 points. It's up 1 point. But I think, Jason, with this data that's come out today, I think a lot of people are like, okay, it looks like 1/4 point. And with that PCE deflator number, you can start making a case that the Fed is going to start talking about, hey, we're going to, if nothing else, we may hear the word pause.
I think so. I think that's very likely, Joe, that the pause is coming. You're still calling for another rate hike in March. I think that's also possible. It's really good. I think these inflation numbers are coming way, way, way down. So they're going to have to pause. Wall Street might actually form a march on Washington, D.C. or something if they don't get the rate hikes to stop. So I think if that 6.5 that we had for the PCI gets down to 5.8 or something, and they raise it up to about 5 on their rates, the pause is coming either after this one or after March. But Joe, I think going down is not going to happen for a long time. The rest of the year, we're going to be stuck with these rates, I believe.
Yeah, it's going to be interesting. We did get some good news on pending home sales today. New home sales. We got bad news yesterday. Good news on pending home sales. If the number sticks, right? Because there's always revisions. But after 6 straight months of decline, there was a tick up in pending home sales. That you signed a contract, but it's like getting engaged, right? Are you actually going to go through with it? We'll see. But at least I guess some rays of light in this pending home sale number for December.
It's Joe, and you'll probably end up being right that it'll be a 1/4 point raise, but it's something like that. And I saw that come across my screen before we started the show. That still makes me think 1/2 point, because you got to get your job, you got to get the loss of jobs, and then the loss of jobs triggers loss of homes and foreclosures. If the home numbers are even barely at all ticking upward, doesn't that just seem like it's not going where they want it to go? It almost seems like they have to do the 1/2 point.
Yeah, and I wasn't gonna put it out there. But I'm like, I got to put it out there. I don't believe that number. Let's just say that. I'm not. I won't be surprised if we get a big revision, taking it all away a month from now. But it is what it is. And to your point, right? That's actually, and it's kind of weird. right? Hey, that's kind of good news. Well, that good news is bad news now, right? They want bad news.
Yeah. I mean, like I said, it seems like this rate hike should be, or looks like it with the numbers that they're using. I think you're right. I think these numbers are all bogus. I think all this quasi good news gives them the excuse to go a half point if they want Wednesday. But quarter point makes the markets happy, makes everyone think it's all going to be in the right direction. A half a point could cause a lot of stress, and I think that's why this quasi better economic news has been coming out this week. It's not good news. It just looks better than the previous months. So we'll see, Joe. I am kind of interested. Most of these rate hikes, I don't really care too much. We prognosticate and talk about it, but this one here is for some reason that little quarter point difference seems like such a big, huge deal this time.
Yeah, Blackstone. Remember, they were limiting redemptions out of their REIT, and they were out today and saying, guess what? Still not fixed. Still have people demanding their money back. This was a $68 billion fund. This is tied mostly to multifamily in those types of buildings, still facing redemptions. Kind of interesting, right? No one knows what way we're kind of going. We're back here, 800-951-0592. Joe and Jason, Patriot Radio News Hour on this Friday. We got a great opportunity. We got a little lucky today. We've got 52 $20 gold pieces. Some of them are Saints. Some of them are Libs. But this is just going to be, you can ask for one or the other. We'll do the best. We'll do the best we can, but you're going to get, either way, you're getting $20 gold pieces. It's all about the price today. Right now online, 21.85. Forget that number. 21.25 right now for the rest of the day here on 20s. And that's, really, we haven't seen a price like that, right? Especially with gold over 1900. Right now, gold's up at 1932. And it looks like with that Fed meeting coming up on Wednesday, we would normally see gold selling off by now. It hasn't happened yet. And I don't know that it will. We actually may get a rally because it only was a quarter point.
Yeah, Joe, we'll see what happens after Wednesdays. I think that any direction is coming in for sure, but there just doesn't seem to be that emergency yet. We'll be here when it happens. So I guess for the average guy out there, Joe, everything was probably doing okay. I guess, right? The average guy is probably just walking around thinking, well, everything's getting better, right? Everything's getting better, but it's all bubbling up.
If you don't need to buy a house and you don't like to eat eggs, right, and stuff like that, then you're probably right. Yeah, you know what? Works okay, right? And for some people, I know this. Some people I talk to, they're actually glad it slowed down.
Right.
They're actually like, man, I needed a break, right?
Some people are already getting conditioned into inflation as being a normal thing too. That's the thing I've been frustrated about, Joe, is I think people are getting already conditioned for inflation being a normal everyday thing. So I just, hey, we got $31 trillion in debt. Yeah, what's another 30 trillion? It doesn't really, it doesn't matter, Joe, as long as I can buy my Starbucks and go to my job and watch my football game or something. It's they just
yep. 21.25 on $20 gold. And again, I love the how the premiums have come way in, but to be able to buy $20 gold with gold at 1930 and change, I mean, you're talking about, that's less than $200 over. That's just awesome. That's
a great price, Joe. I mean, we've suffered through the couple of years of the higher premiums, and we've got these lower premiums that are sitting here at this moment, the last few weeks. And to not jump in on gold in this situation, because the spot price is up with the premiums down, essentially you're getting gold about the same price in a lot of ways, but this is a lot lower. And I think Joe's right. We're looking at higher premiums coming back, and it can just happen in a snap. The January 6th thing, it just happened. The Ukraine war, there was a little bit of a buildup, a couple of weeks, and then it happened, right? Coronavirus, we heard of this thing in China, and a month or two later, it happened, right? So it just takes one of those events, Joe, so that when the weakness in the markets that are going to happen, they can blame it on this new emergency. So right now, I'll say this, Joe, the news cycle isn't quite as scary right now. So I think people, I'm looking at this, one of the normal channels, the U.S. inflation rate slows again to a 15-month low, and inflation is now on the right track and all this stuff. And I don't know, 6 to 12% higher year over year, I think is not the right track, Joe. Yeah, lower than the previous
Well,
month.
you know what, again, right? That's what they can do. And I think you're right. People have kind of just accepted it. And here's another thing for gold. China came out with a lot of their gold numbers. Of course, the largest gold consumer. They're also the largest gold producer. They mine 374 metric tons of gold. They don't export any of that. But I want people to know, now it was up from 2021 because where the mines were in 2021, they got locked down. But this 374 tons, that's way down. You go back to 2018, 2017, China was mining 420, 430 metric tons, and that was kind of the plateau. Jason, it seems like they're starting to, I don't want to say run out. That's the wrong word. But the days of China mining 400 metric tons seems to be behind it. And then the other part was demand from China was actually down in this last year. Again, because of these lockdowns. Now that they're open back up, you're going to see a surge in jewelry sales. You're going to see a surge in investment because people are going to be out buying. This is another one, and I didn't even think about this one, but a very bullish, another reason, hey, why are we so bullish on gold in 2023? Jason, here's another reason. China's reopened, and they're the largest consumer, and you're talking about, they're expecting demand for gold in China to increase between 10 and 20% in 2023.
I actually agree with that number too. I could see actually the demand in gold in China go above that. They have a massive, and it's an ongoing property problem. People that were buying properties that they don't even live in, because that's how they do property different in China, and they have a massive property problem there. It's a massive problem. And if you're one of those, if you can actually see the pictures of these Chinese people outside the banks and their accounts are closed and having so much trouble with their money, why would you buy another property, right, Joe? If you're a Chinese person, you're going into the gold shops and the silver shops, and you're probably stacking something that you can hold that the government can't blow up, that the greedy property companies can't mess up on you, Joe. So I think the population is going to help surge that number, not just the government and their central bank. I think the population will push that number, Joe.
Yeah, when we looked at the numbers, to give you an example, gold consumption was down 10% in 2022 in China. They're saying, hey, they're going to take all that back, plus some more. Jewelry demand was down 8%. Investment demand was down 17%. And everyone's saying, hey, this is going to be a big turnaround, especially if you got to remember what's changed in the last 2 months. Oh, that's right. China's central bank has been officially telling the world we're buying gold again. And the Chinese consumer, they like to do what the Chinese government does.
That's exactly right, Joe. And like I said, there is some behavior in the Chinese people that's different. I think the Chinese government is seeing some of this resistance against what they're doing. So I believe this is a really strong for gold purchasing in China, Joe. I think these numbers are exactly right.
China also, by the way, when we get back, they're now number one in another commodity. I'll tell you what that one is when we return. 800-951-0592. We've got about 33-20 is left. 21-25. Gold's up 3 now at 1933. Silver's down 30 cents. The Dow is up 50 points. But Jason, China, this reopening, it's big news. It's going to be very bullish for commodities. Gold and silver are obviously a part of that. But now liquefied natural gas. China has now become the largest consumer of liquefied natural gas in the world. It's been absolutely insane. Jason, they have signed all kinds of deals all over the world, a lot in the Middle East, some even here at home, over 50 million tons that they've locked up of liquefied natural gas. To give you perspective, from 2015 to 2020, China was consuming about 16 million tons of liquefied natural gas. All of a sudden, Jason, it's jumped to 50 million tons. And one of the things that China's doing, they signed a 27-year deal with Qatar, a 20-year deal. I mean, they're signing these massive contracts, guaranteeing, listen, we're going to buy 4 million tons, 2 million tons, 5 million tons. I mean, they're going to buy 50 million tons a year. And it looks like they're still buying. And here's the thing. China used to buy liquefied natural gas mostly on the spot market. In other words, hey, we don't want to sign a deal. We'll just buy, whatever it is in January. We'll buy what we need when we need it. This is a major change. I think this kind of tells you what China is expecting to happen with commodity prices. Obviously, signing 20-year deals tells you that, we're no longer comfortable going out into the spot market to buy what we need, because, Jason, obviously, I think they think the price is going to be a lot higher.
Yeah, it's kind of a little secret, natural gas. You have all these environmentalists, and the climate change people, and wanting to make the world less, burn less carbon, right? And you got this clean burning fuel, natural gas, which there's such an abundance of. There is an abundance of natural gas. And I think China's change here, Joe, has part of this has to do with during coronavirus, they had some major problems with conflicts with Australia. And Australia was bringing in a ton of their coal for what they burn a lot of coal in China. And when they had a disruption in the supply of coal coming in from Australia because of some weird measures taken by Australia and by China, it really disrupted their energy flow big time in China. So I think this move to natural gas, it just shows an advancing society that wants to move a little more free of coal and move into natural gas, which, Joe, I mean, ESG is coming in China. I don't think China wants to deal with ESG, but if all the major corporations of the world, which are bigger than most governments of the world, are going ESG, China is going to have to do business with these companies, which means China is going to have to be ESG, and natural gas is going to be a lot more favorable, I think, than coal.
I'm going to say this right now. The big deals they're signing residing in the Middle East, Qatar, the biggest of them all. China announced also major spending in the Middle East to help increase output of liquefied natural gas. They're saying that already for 2025, that's not very far away, they're going to be short over 7 million tons of liquefied natural gas based on these orders that China's been placing. And it really is relevant. It's very important because China's starting to flex its muscle in the Middle East. I mean, what was it? Last week, Saudi Arabia in Davos said, hey, we're ready to take payment for oil in something other than dollars. Now, all of a sudden, here comes China with liquefied natural gas. Jason, I think it's just leverage. This is a deliberate leverage by China moving away from a U.S. ally, Australia, right? That's part of it. The other side of it is, oh, by the way, another reason for these Middle Eastern countries to start taking renminbi.
I think that's that's right. That's exactly right. And America is, this has been a few years since I saw this number, but America was sitting on an estimated 100-year surplus of natural gas right here in this country here. So I don't know exactly what that means, China moving towards it as far as our relationship, America with China specifically, but I know for a fact that puts them in a more favorable position worldwide in the future. Because really, when it comes to energy, Joe, you can burn whatever you want to burn, right? And if the world community that you do business with wants to go another direction, you're just going to have to do it.
Well, and again, right now, most people don't realize, you know what? We are the largest exporter of liquefied natural gas to China right now. And they did sign a $2 million agreement with a Texas-based company, but when they talked about ramping up spending to $50 million, right? And we only got 2 of it. That just shows you China's looking for liquefied natural gas from sources that aren't real. We'll just call it non-G7 sources.
Joe, and I've seen energy charts, and the usage of energy has never slowed. Every single year, there's a higher demand worldwide for energy. So I think this is just more people needing more energy overall, Joe. In fact, I don't think the coal industry will be hurt by this. I think they're going to burn more coal in China too. That they're going to burn more natural gas. They're going to burn more of everything in that country.
Believe me, China's still building coal plants. Let's not kid ourselves. So the energy needs for China and India are off the charts, and China's getting ready to making big deals happen. Big deal here: $20 gold pieces, $21.25. Pick them up while we still have them. Final segment coming up. $800-951-0592. Joe and Jason wrapping up the week. It's been an interesting week. Gold's going to end the week higher than it started. We touched a new, I guess, high since this rally from that bottom at 1620. We got almost to 1950 intraday yesterday before we had some profit taking settle in. We had some more profit taking to start today, Jason, and that seems to have gone away. We got buyers coming back.
Yeah, there's a little bit of moving in the early mornings and during the day, but it's just kind of steadily, just kind of clicking upward a little bit every day, isn't it, Joe? It just it's never going to go straight up. But gold. I'm looking at gold. That's it's in the 1930s, and silver did bounce back below the $24 range, but it's been coming up really nicely over the last bunch of months. And I think we're just going to, just like if things are going to grind down slowly, Joe, is my estimation in the markets before we have a big crash, then I think gold is just going to slowly grind upward. And that's kind of what we've been seeing since it hit its lows last year.
Yeah, and it really has been something where, again, we had that big dollar rally last year, and it wasn't a rally really of strength. It was more of a rally of, hey, Europe, you've got the Russian problem at your doorstep. We don't. Everyone's been raising rates. This is going to be the year where you see the dollar. And of course, it's been right. The dollar's been coming off. We're expecting another step down. And as we talked about it, right, every step down is a higher gold price. So we're expecting a step down on Wednesday to 1/4 point. The question then will be, okay, how many more 1/4 points are there going to be? And that's interesting because I'm shocked that we only got 150 basis point hike. Are we only going to get 1/4 point hike? Or maybe are we going to get 2 1/4 point hikes? Because then the next stair step up for gold is going to be when they're going to call it a pause, whenever that pause comes into effect. And then, Jason, I think we're going to see a pause and quantitative tightening as well. That's the next stair step up for gold. Mm-hmm. And then, obviously, if they talk about quantitative easing again, or if they talk about the need to lower rates, gold goes higher again. And then, of course, when they actually start quantitative easing and lowering rates again, I think gold's higher again. So the factors for gold, pushing gold, we're going to have new all-time record high gold prices because, and not because I say so, it's just because this is the environment that the central bank has put us in.
I think if it's a quarter point on Wednesday, Joe, I see them pausing after that. If they go to a quarter point on Wednesday, you're going to get several months of numbers of inflation going down before the next possible chance to raise it. I think there'll just be too much information to tell them to pause. So if it's a quarter point on Wednesday, Joe, I easily see them being done. That could be the last one and then they're going to do the wait and see the rest of 2023.
Yeah, we don't know. We're speculating that could be, if Jason's right, and that really is what happens, that they go this quarter of a point, and then they're going to end up pausing. We're going to have new record high gold prices even sooner. I mean, that's just what it's going to be. Without a doubt, if the Fed starts talking pause, we're going to see another big leg up in gold. 21.25 on those 20s at 800-951-0592. Jason and I, we're going to be back with the half empty cup with Glenn Tate to wrap up the week.